Little buddy, getting to know you, getting to know all about you. Oh, Chief Allman really wound up today. Enthusiasm, I think that's my second favorite asm. My first would be sarcasm. Well, one day is Thursday, June 5th, 2025, and this is the week in charts. Obviously, I want to thank all you guys and girls for attending today. Appreciate you taking time out of your busy schedule to be here. It means a lot to me. It really does. All right, we're going to talk about, well, obviously my date's wrong. It should be 6/5/25. Current market conditions, your questions on trading, your favorite stock picks, feel free to punch those in now. As usual, I'm going to talk about the methodology in action. We've got a couple of mystery chart updates. We did hit an IPT on one, which is a great thing, obviously. I have a few things to say about that. I want to talk a little bit about Mind the Trade. That's a little bit of a psychology session that I occasionally do. And that'll make sense in just one second. And I'm going to continue my series on a million little things will make you successful. Getting to know you. And that's going to make a heck of a lot of sense in just one second. And again, Q&A, if you have any questions, just feel free to ask them. There's the disclaimer screen. He tried to say, as you know, you can lose money trading, or as often summing up all predictions about the future and a lot of stuff can happen between now and then. There's all my contact information. Obviously, grab a screenshot if you want. Feel free to contact me if you have any questions on anything. One thing I was thinking about, I wrote a column a couple days ago, and I was just thinking about how many people struggle and they don't have to. And believe me, trading is a struggle. And I struggle a lot. I drop a lot of F-bombs and I have a lot of issues. But a lot of people struggle and they don't have to struggle. And the reason is they're chasing rainbows and everything. And I think that if you really want to learn to trade, how to trade, I'm willing to help you, but you have to put the work in, is where I'm trying to get to on this. And most people chase rainbows and chase the Holy Grail and all this other good stuff, and they end up in this perpetual hamster wheel forever. Anyway, the article is don't let your trading be like a blind man in a dark room looking for a black cat that doesn't exist. And the point I was trying to make is I will help you personally, but you're going to have to do the work too. Okay. All right, let's talk about the mystery chart. Hopefully that makes sense. Mystery charts and the methodology in action. And I think it's a very traders. I think it's a very learnable thing. The psychology part, pretty tough though, and we'll get to some of that in just a minute. Here's a follow-up on a mystery chart, which is also a good psychology lesson too. I noticed that the Landry light down below was all green, and then occasionally it would come down and to zero whenever the price comes down to the moving average. This, in case you're new to me or my methodology, this just counts the number of bars that the stock or crypto or whatever you're looking at, index, ETF, is above the moving average. It could be any moving average you want. I like the 30 EMA a lot. I used to be a huge fan of the 20 EMA, still am, I guess. But now the 30 seems to really be a great moving average to pay attention to. But anyway, Landry light pullback, you're just looking for 10 bars or so above that 30 EMA. Ideally, you want some acceleration and persistency, and we have both of those here. And then you're looking for a pullback to the moving average. This is a fairly clean setup for a gold stock, and I like setups to be as clean as possible, obviously. With the gold stocks, I tend to be a little bit more lenient. But anyway, pulls back to the moving average. And notice down below, we go from a Landry light count of 11 or so down to 0, because when you touch a moving average, it resets. And this was the recommendation in my service entry of 2150, protective stop of 1875, IPT, which is initial profit target of 24.25, and that's $2.75 risk on this particular trade. Entries here, stop is here, initial profit target is up here. And you can see it triggered an entry. It did okay for a couple days, but unfortunately came back in. But fortunately, took off again. My youngest daughter, when she was, I guess, in elementary school, they were teaching her, fortunately, unfortunately, and my wife and I were always saying that to each other. Fortunately, whatever happened. Unfortunately, this happened. So This is unfortunately, but it ended okay, fortunately. Well, I guess it's not completely over yet, so we'll find out. Anyway, there's my trades down below. I had taken profits slightly early on this one. And also because the entry, it triggered about 10 cents above where my initial entry was. The initial entry was 21.50. The entry that I ended up with because of the gap and all was 21.60. So a little bit less than $900 in the model account. I did take this across multiple accounts and I did exit slightly early, but I did put out a warning first that, hey, start thinking about exiting. And then the other thing that I had a little messed up was in my service, I had fat fingered it. I put the IPT at 24.75. It's supposed to be 24.25 because my equity in my model account was approaching 2,000, which is we're looking for a 2,000 total gain, which would be 2% of the overall count, and then we take off half of that. And I think I have a spreadsheet in here in a minute. I'll walk you through a little bit of that in a second. But anyway, stop comes up to break even on the remainder, barring overnight gaps. The worst you could do is break even on that. I have a guy in the group that's doing a lot of research, and he's putting his money where his mouth is. He thinks that you're better off hanging on to the whole position. And I think if you're in a rip-roaring bull market, yeah, but I've seen way too many stocks come right back in after hitting that initial profit target. So and psychologically, people have asked me before, is your money management psychological, statistical? And my answer is yes. I think psychologically, not to get all fresh with psychology on you, but above Wi-Fi and food and shelter, as far as things you need to live, it's a self-actualization, self-fulfilling, self-realization, self-actualization, et cetera, higher up. I think that lower down you have those more intermediate term needs, and I think that taking the partial profits sort of fulfills that. And it also, instead of watching $2,000 completely evaporate and possibly even turn into a loss on a gap overnight, why not take half of that money, put $1,000 in your pocket, and barring overnight gaps, if you scratch out, at least you got $1,000, and multiply that by the size of your account, obviously, 2,000 per 100. Anyway, here's KGC. It was in a longer term uptrend. It did accelerate higher, and then it kind of flattened out a little bit, but then it tried to break out and came back in. That's okay. That's a pattern I call a double top knockout. And once again, we come down to the 30 EMA. As I often preach, and I also preached in that article yet again, basically the article was on me preaching, and so I did a lot more preaching. And it's a worthy read, if I say so myself. You can find it on Substack. You can also find it on my website, davelandry.com. But anyway, the point is to keep it simple, and all you need is one pattern to be successful. And I'm shocked. I mean, that TFPM was a Landry-like pullback. This is a Landry-like pullback. It hasn't worked out swimmingly just yet. We are profitable. I'm up about $1,000. No, actually $700 now in the model account, which is better than poking the eye so far, at least knock on wood. But anyway, I'm amazed at how this one simple pattern, and I remember a while back, I don't know if I've said this ad nauseum, but a while back I was in a webinar, and I went in and looked at all the recent trades, and we were on a pretty good run at that particular point in time. And all of the trades were Landry-like pullbacks, and I was kind of shocked. There were other patterns too, but they were all also Landry-like pullbacks. Like this one is what I call a double top knockout, where you have a minor double top where it looks like the stock could be in trouble. You get the knockout move, and then of course it's backed by a longer term trend. Then if the market begins to resume its uptrend, a lot of players, a lot of shorts get sucked in, and a lot of people get squeezed out along the way. Anyway, down here you can see DTKO, double top knockout, pullback. It's also, again, a Landry-like pullback. So that could be your only pattern, even though it's other patterns in this case too, which is even better. Anyway, entry here, stop here, initial profit target here. Let's take a look at what happened. It comes up, it triggers, didn't do a whole lot, and it's kind of meandering around. And it's right about there now, maybe a little bit less. And in a case like this, I'm not showing in this slide, but we would bump the stop up a little bit. So a lot of people say, Dave, do you wait until you hit the initial profit target to bring your stop up on the remainder? And the answer is no. If that happens intraday, then obviously you do it. But if the stock moves a little in your favor, it's kind of almost a 1-for-1 relationship with that stop on the entire position, okay, the full loaf, so to speak. And if it's only up a few cents here and there, I don't really bother adjusting it. And I also, in more recent years, have loosened it up a little bit in the process. So if it goes up 25 cents, maybe I'll bring the stop up 15 cents or whatever. Now, once I hit the IPT and I'm free rolling, so to speak, playing with the market's money, so to speak. Did I just make air quotes? I hate people make air quotes. Little buddy foo-foo. Anyway, once you're in a position like that, it's a good position to be in. And then you can allow that stop to gradually open up over time. Now, you never move the stop away from the stock. You move the stop up as the stock goes higher, or crypto, whatever market you're trading. And you do that two ways. Let me just get it out real quick since it's in my head. Gaining ground would be one way. Let's say you're blessed with a stock that goes up 3 points. Then you might only move your stop, STOP, up 2 points. So you've gained ground, you've gained 2. So you're going to make 2 more points if you get stopped out. But what you've done in the process is you let that stop widen out 1 point. So as the stock gets higher in price, the point movement is going to increase, okay? So letting that stop widen out, you're adjusting to the higher price in the stock, okay? Also, if you do this right, you're going to get an expansion in volatility, so that volatility is going to increase. And then by letting that stop loosen in a second loaf, of course, you're adjusting to that longer term volatility. The other thing is you're putting yourself into more and more of a position of a longer term trader. Like I said a second ago, client, he's experimenting with the full loaf and everything. Well, the reality of that is you probably need to use a smaller position size and a much wider stop. So the point I'm trying to get to there is, let's say you want to hold the position for, let's just pull something out of the air, 2 days. Well, the volatility on 2 days is about that big, okay? Let's say you could withstand about a 2-day move. And my goal is to withstand a swing trade move of a week or so to try to see if we can get that swing trade profit out before letting that stop loosen on the remainder. But if I was to go in and say, okay, I want to hold this stock for 6 months, my stop needs to be really wide, okay? So that means I'm going to have to trade fewer and fewer shares. So for me, this is kind of like a Goldilocks thing, the taking partial profits, using the 2%, and the widening of the stop and the remainder of it. It just works for me. Now, as you'll see in 1 second, from a psychological standpoint, there's a lot to do with trading that fits your own psyche, okay? And I could give you the greatest system in the world, and if you didn't have the guts to follow it, or the confidence to follow it, or the discipline, however you want to look at it, then you'd be in a lot of trouble because you couldn't follow the system. And the example I've given before is I was on a traders panel once, and one of the guys there said that he had a system that worked, but he just couldn't follow it. It didn't really fit his psyche. And he actually hired someone to follow it. And the rules for the employment were really simple. Follow the system. That's pretty much it. And rule number 2 was, if you don't follow the system, you're fired. And he says, son of a bitch, the guy followed the system. But anyway, so this is KJC, slightly profitable, or nicely profitable. So we will move that stop up a little bit on that. Now, just a quick example. I like to throw a few things out, live examples here and there of things you need to be cognizant of. And one of them would be wait for entries, okay? So make sure you're cognizant of that. And this was stock in a decent uptrend. And I actually felt like it could use slightly more pullback. I know it's kind of crazy, but it's a super volatile stock. I forget the HV, but it's triple digits. And it was a trend pivot pullback. So I felt like it was a little too risky to show as an official setup for my trading service. So I made it an honorable mention. And then whenever I put out an honorable mention, people immediately email me, Dave, give me some parameters. So I always put the parameters in there in case anyone wants to take a more volatile type of trade, a more speculative type of trade, or something that might be set up perfectly. Anyway, there's all the parameters, and the main thing to watch is the entry was 450. Entry was there, stop was down here, and IPT was up there. Now, percentage-wise, this stop is huge, just FYI, but notice how much this stock moves around. This is like a 300 to 400% move over a fairly short period of time. So when you're looking at the chart, the stop's only that far away, but in reality, it's like a 30% stop. And you know, people told me before, Dave, I can't trade no 30% stop. I was like, well, you don't get no Coke. You know, that's what the market calls for. You adjust your share size accordingly. So you don't come in here and trade 10,000 shares on a 100K account. I think it was 1,300 shares or something was a share size based on 2% risk. Anyway, long story endless, the point I'm trying to get to is that this stock failed miserably, as you can see, but no capital was put into harm's way. And as I said 10,000 times, and even in the aforementioned article, I'll get emails from people all the time. 6 months from now, I'm going to get email on this one. Hey, Dave, what should I do with that trade you recommended? I'm down 90%. I was like, I never recommended that. It's going straight down. Why would I recommend that? Yes, you did way back in June. I'm like, okay, well, let me go take a look at that. It's like, oh, yeah, I recommended it in May, but looks like it never triggered an entry. Anyway, any questions on all that? Let's keep moving then. Welcome my YouTube brethren. All right, where are we now with the TFM 10% system? I'm not going to go through all the rules there right there for you. I've kind of beat the dead horse on this. I will say for a buy, you need 2 bars of Landry light, 2 lows above the 50 simple moving average. That's a weekly moving average. It's a weekly chart. Now, as I said in last presentation, which was a couple of weeks ago, I don't like buying with this system when it's in a down week like that. Now, I haven't done all the testing and how much opportunity cost you would give up by not buying it then, but I would be willing to bet, and from a little bit of empirical research, there would be quite a few times where you would get whipsawed out by buying on that down move. As you know, with the swing to intermediate term trading, with my methodology, for the core methodology at least, I'm buying things that are going up when they're going up. So I put in a stop entry order. And by the way, I'm shocked at how many times that has kept me out of trouble, these stop entry orders, as opposed to just getting excited about a position and jumping in willy-nilly. So I do like to buy on strength. So now, if we can kind of hang around these levels between now and tomorrow, or even now, I think it would be good. It would be from a system standpoint. I'm not personally buying it this time. I did buy some Qs a while back and wrote it out. But if you were kind of looking at this system as to whether or not it's a legitimate buy or not, now that we're taking out this prior little high in here, and ideally, if you wanted to get a little bit more precise, maybe if we close above that high on Friday, that would be worthwhile. But it is kind of interesting. All right, Landry 100, proof of concept. It's just a bunch of stocks. It's 100 stocks that I buy or put in the portfolio when they're making brand new 52-week highs. Now, occasionally what I'll do is if the market conditions aren't fantastic, I will go a little bit further down from 52-week highs. But for now, it seems like 52-week highs seems to work. But I seem to remember years ago when I first did this, and I quit in between, as I said before. But when I first did it, I remember the conditions got crappy soon after I started this list, and then I found myself down to like 90-day highs. Anyway, the good news is speculation is still alive, and well, all of these stocks are bought at brand new highs. This one is up 200%. The buy was there, and you can see it kind of failed miserably initially, but then it eventually took off. So not a perfect example of a stock just making new highs and keep on making new highs, but you can see that buying new highs in general is a conceptually correct way to approach markets. The big caveat is that this portfolio, which is hypothetical, is 100 stocks. So you're going to occasionally capture the 200, the 300, and even the 1,000% move in these stocks if you have a portfolio of them. So getting back to the proof of concept, and I'm just kind of thinking out loud here, but one of the things with a methodology, and I've been chastised for this, for saying this in presentations, but it's true. It can be a little elusive because you're depending on that occasional outlier to make your year, and it doesn't happen that often. But every now and then we'll get in one and ride it for a few years, and it'll go up 300 or 400 and even 500%. That makes a huge difference in the overall portfolio. So this is a hypothetical $1 million portfolio. So this one position here is now worth 10% of the entire portfolio. So that makes a huge difference. And a big winner or two every now and then will cover a multitude of sins. I've often said that money management will cure multitudes of sins, but a big gainer also will help you out tremendously. So that was the first 1,000% gainer. I don't use any money management in this. I think if this became a real portfolio someday, then yeah, I probably should use some money management. Maybe at the least sell each one at a 100% gain, half of it at least, and then keep the remainder. But I was thinking about, as I was getting ready this morning for the presentation, if you're up 1,000%, as I just said, that's 10% of your entire portfolio in one stock, and it's supposed to be only 1%, right? Because you're putting 1% in each stock. 100 stocks, 1% each, 10 grand, $1 million bucks, 10 grand in each stock. Now it's worth 10 times that amount. So I think you'd be foolish not to rebalance a little bit. Now there's a fine line between rebalancing and giving up your huge winning position and continuing throwing caution to the wind and letting all that evaporate. This stock has gotten whacked a little bit since then, since I took this snapshot. The snapshot was in my put in my Facebook group a few days ago. Anyway, so the point is some money management would be needed. And again, not to beat the dead horse because I say this every weekend, but as a private trader, I wouldn't rush out and just buy new highs, okay? Unless you're trading like a buy at B pattern and IPOs, or as I'll show you in 1 second, brand new highs or breakouts in crypto. In general, I'm not a breakout trader. I'm more of a pullback trader. Everybody here who knows me today is like, geez, Dave, why do you say the same thing over and over? It's like, well, I'm trying to avoid follow-up questions, so I'll try to explain everything in every presentation. But anyway, you can see how this works. Another cool thing about it is you can see where all the momentum is stacking up. So you can see I have a ton of gold stocks in here. And if you also notice these industrial stocks, quite a few of these are metals and silver. TFPM, I think, is gold, but it might be some silver too. We're along that one. That's the one we just talked about a minute ago. Anyway, that's kind of cool. And there's also some physical gold ETFs that's not listed as being golds that are further down this list, but also in the list. So this is kind of cool. You can see where the setups are stacking up. I don't see any in here now, but not too long ago, there were grocery stores and maybe a few major drugs. Probably not a whole lot because the major drugs did poorly during the last downturn with most everything else. But the point I'm making there is those were stocks that are defensive in nature because people need drugs and groceries in a bear market. And some people need more drugs. There it is. Notice I zoomed those in. You can see those are the gains in those gold stocks. And what's kind of interesting, and I think I just said this, but what's interesting is quite a few of these got knocked out of the portfolio recently. So it would have been even more stocks. And one thing I'm not really paying attention to, and if this was real money again, maybe I'd have to. But I wanted to take advantage of the momentum as much as possible. So if the gold stocks are running, I'm just going to keep putting golds in here to fill slots if that's what's coming up, right? And I'm not really worried about how many gold stocks end up in the portfolio. If you were doing this on your own or with real money, As an institution, you probably would say, well, we've got 10% of the portfolio in gold. That's probably enough. So maybe 10 stocks max or something. Anyway, just some fodder for research there. As I say quite often, the momentum does end badly in a bear market, which we're no longer in, I suppose. The relative strength trading, they'll eventually find you. So some of those grocery stores begin to tank, for instance. And it's a great way, again, to see the money flow. Cash is not trash. It's treated as an asset class. So I know I've just kind of blazed through that, but we talked about that quite often. And that's kind of one of the cool things about it is you'll just start getting slots of cash if you can't find setups. Okay, so it might be 99, and then before you know it, I think I was down to about 80 or so stocks. So there were 20 slots, so to speak, open. So it's okay if you can't fill the whole thing. And it's a great exercise, if I say so myself. A lot of my big winning trades come out that list. You saw that TFPM was in there. That was a recent one. KGS is in there. That's in the portfolio now. So it's a good exercise, if I say so myself. All right, let's shift gears and talk about mine, the trade. Back when I lived in the country, and I guess to a big extent nowadays, my wife either has unbelievable confidence in me or she knows how to goad me into trying to fix something. But as I've said 1,000 times before, we've had a plumbing problem or something, especially out in the country where a lot of stuff can go wrong. She's like, all you got to do is, get your little wrench on. And as I've said quite a bit, a few hours later and 6 or 7 trips to the plumbing store, I'm wet and soaked, deflated, and phoning a friend and trying to fix it. So it's never as easy as it looks. It's never all you got to do. But if you think about it, all you got to do is plan your trade and trade your plan. I know, easier said than done. But I wanted to show you this. So with TFPM, let's say you had a 100K account and you bought however many shares that was. I think it was 700 shares. Yeah, 700 shares. So within a few days, you're doing okay. You're up 444. That's not too bad. Better than poking the eye, right? But then look what happens. You're down $1,630. Now, I don't want to ask my clients, but I'm willing to bet that some of my clients said F this, okay? And I said F this too. I just didn't exit the position, although I wanted to, especially because I had this in more than one account, and I did have more than 700 shares in another account. And it was a big, fat, ugly red number to look at, but stop wouldn't hit. So I have to follow it. And this has actually been good for me. And that's one thing I've encouraged this aforementioned gentleman to do. He's been posting his trading and the things he's following and his money management and so on and so forth in the Facebook group. And I think that it really helps you to flesh it out when you go public, so to speak, with what you're doing. And so the old me years ago, I guess 20 years ago, before I had a trading service or whatever, I guarantee I would have bailed out on that position. But now it's like I feel like I'm stuck with it, right? Because I'm not stopped out. I'm stuck following my plan because I made that, what's the word? What's the word when you, not declaration. So I made that declaration. Here's my declaration. We're going to get into here and stop out here, and we're going to follow the plan no matter what. Easy, huh? Well, easier said than done. Anyway, you can see that the equity swing, and this is like the hokey pokey. This is what momentum trading is all about, is being able to ride out these swings, not throwing caution to the wind, okay? If you have a plan that says stay with it, then you have to stay with it. And I know it's easier. I sound like Bill Clinton. I know I did not have sex with that woman, Mrs. Lewinsky. I know Dave Chappelle does a good skit on that. But anyway, with this momentum trading, it's going to be volatile, and you're going to have to ride out the zigs and the zags, and you're going to have to make a plan. And if you're getting stopped out a lot, then you need to look back to two things. One, are your stops too tight? And two, is your stock selection really good? And I would have a lot more clients, and here's another one of those beating the dead horse things. I would have a lot more clients if I showed a lot more recommendations in my trading service, but I won't do that because I know if I showed a lot more, they probably wouldn't work unless conditions are really, really good. And I'm just super selective with everything to, sometimes my clients say to a fault, and that's why I'm throwing out ancillary ideas, and that's why I publish a Landry list every day, a list of potential stocks so they could do what they want. But the official recommendations, I'm very, very selective with that. And obviously some of these turn into losers. I think we had 3 losers in a row. My clients often remind me of that when they have losers. So thank you for that. And, you know, while we're on Bill Clinton, I feel your pain in more ways than one. Anyway, any questions on all that? We'll shift gears and move on. And I know it's hard for a lot of you guys, especially since I went back to days to watch the shows live. So just type a comment down below if you want me to answer something. All right, as I've said 1,000 times, and at some point it'll be 1,000,000 times, I've been doing a series on 1,000,000 little things, and probably about a year ago, I had the epiphany that there is no epiphany. The epiphany is there is no epiphany. Trading is not like you get, you know, bam, okay, I know, I've got it figured out. Yes, I know exactly what to do. I'm just going to make a lot of money. It's 1,000,000 little things, and I'll give you one this morning. I had a stock that I wanted to trade, and I actually forgot to look at it because I didn't pull up my screen, that particular screen or whatever. And so that's just one little tiny thing, and believe me, there are many. And this is one reason I'm doing this series. And as you'll see in 1 second, there's details are very important, and details of 1,000,000 little things I think kind of dovetail together. But anyway, it's going to be 1,000,000 little bitty things that are going to make you a successful trader, and not just one big deal, one big thing. So number 633,701, getting to know you. Getting to know you, getting to know all about you. You want to take oh, Chief Allman really wound up today. You want to take a personality test, and that comes from the mental edge of trading. And this is by Jason Williams, and this is Larry Williams' son. And he's an MD, and he's also a psychiatrist. It's a really good book. And this is what I wrote on my website. If you go to davelandry.com/books-to-read, you can get it there from Amazon. This one's from Larry Williams' son. My copy is dog-eared, underlined, and filled with notes in the margins. I plan on several rereads. My biggest takeaway was to take a psychological traits test. Through this, I found that I have some traits that were not so good for trading. And we'll go over those in 1 second. Full disclosure. I had low and nearly no score in agreeableness. In addition, a little neurology and lots of psychology. In addition to a little neurology and lots of psychology, he does case studies on psychological traits of famous traders such as his dad, Larry, Linda, Rasky, and others. Anyway, highly recommend you read this book. Just in the forward, and after reading the forward this morning, rereading it, I'm probably going to spend a little bit more time on this book in the near future, just because it's good stuff in it. And in the forward, Larry says, I learned that in order to change taking incorrect action and not changing detrimental habits, we really do need to know ourselves. Without knowing yourself, how can change occur? And I've been thinking about this a lot lately. Trading is really more of knowing yourselves than knowing the markets. Obviously, knowing the markets is important, but just realize that you're emotional and markets are emotional, and those are the two biggest things to realize. And as I've said before, from a neurological standpoint, you cannot get rid of emotions. They're part of your makeup. While intellectually I can develop systems, my personality is not one to follow them. Like I said a second ago, somebody developed a system, it worked, but he just couldn't follow it, so he had somebody else follow it. So Larry went on to say, or he was talking about the fact that he's a discretionary trader and he could build systems, but he realizes now, especially with help from his son, that he realizes now why it's hard to sometimes follow them. What I didn't know was that my largest trading weaknesses have been my lack of paying attention to detail. Good Lord, am I guilty there? What did I just admit this morning? I forgot to look at a stock. Luckily, it didn't trigger that I was thinking about. I was in the shower a few minutes ago. I thought of a few more things, okay? I had a stock that was in a Landry list not that long ago, TOI, and I put in an order to sell 200 shares in after hours trading, good to cancel type of order. And I was supposed to put an order for 2,000 shares, and that was on one of my smaller accounts. I was supposed to do that. So that was a big mistake that I made. I heard the zing go off, and I got all excited because I hit my initial profit target. And then I was like, wait a minute, why do I still have 1,800 shares of those 2,000 that I meant to sell? And when I checked the order, the order was for only 200. So details are big, and I'm not a very good details oriented person. Clearly, I'm not the world's best detailed person. Amen, my brother from another mother. Not even close, but I never realized until reading Jason's work and understanding how much of a hindrance that was to making my trading even more successful. And I think that dovetails in with a million little things. And Larry went on to say, by the way, speaking of details, you've got to watch Big Dave's Million Little Things series. Successful trading really is a million little things. Thank you, Larry. It was very nice of you to say that. All right, so I took my personality test and I failed in a couple of aspects of it. I was very low in agreeableness and I scored 0 in modesty. Those are not good traits for trading. I remember, as I said 1,000 times before, my wife and my youngest daughter were home at the time, and I went in the house and right after I took this test, and I'm like, "Can you believe this? I scored low in agreeableness," and they both looked at me like I pooed my pants. So I'm not. It's like I'll argue anything if I think I'm right, and I'm pretty adamant about it. But I have been wrong quite a bit in my life, which makes me realize that maybe I shouldn't be so confident, and maybe I should be a little bit more agreeable. But this has helped me tremendously. Just like Larry Williams said, getting to know you is really important. This has helped me tremendously because every time I go into a trade this morning, for instance, I found myself with this in the back of my head. It's like, oh man, this looks good. I'm jumping in. It's like, well, hang on, Dave. Could you be wrong? Okay, could Big Dave actually be wrong? And believe me, I'm wrong a lot. And it just gives me that mental pause that is sometimes needed in trading. And not to go too far off on a tangent. Imagine that, and you go off on a tangent. But I've done presentations before talking about the inner brain, the outer brain, the lizard brain, and the rest of it sloshing around that sits on top of it. And this is what makes you you, and this lizard brain down below is which creates your animal instincts, and we're still animals, right? And getting from that lizard brain, which is very emotional, and it has to be because if you're in a life or death situation, you're going to have to make a quick snap decision, and you don't have time to mull it around in the rest of your brain. You've got to act quickly. So it is important for you to have that part of your brain, but that primitive brain deep within can cause you a lot of trouble. And that's why neurology is important. And like I said earlier, it's been a while since I read this. So I need to reread it. And I've got notes. I mean, just stupid notes everywhere. all in the margins and everywhere. Just inspired by this. But one of the simplest things you could do is take a little pause before trading and let the rest of what's sloshing around up there think through what you're doing, as opposed to let that amygdala and that little lizard brain take over. Anyway, my lack of agreeableness makes me realize that every time I go to trade, I do think I'm the greatest guy in the world. I'm going to make money on this trade. And, why would you go and trade if you think you'd make money? But you can be wrong. And there's two types of personalities. There's toward personalities, there's away personalities, but both are necessary. I'm a big fan of Clarkson's Forum. I just enjoy the heck out. I like Jeremy Clarkson. He's just a trip. But Jerry, he's the eternal optimist, hopeful, and he's just a lot of fun. And I guess you have $200 million or whatever he's worth, you could be that way. But he has what he calls Cheerful Charlie, which is the guy who's grounded in reality. So Charlie has an away from personality. Jeremy has a toward personality. But you need both of those, okay? You need to be motivated. And what's the old saying? I was going to be a pessimist, but I figured it wouldn't work out. I think that's Stephen Wright. You need both, and you need to be enthusiastic when it comes to trading. Enthusiasm, I think that's my second favorite asm. My first would be sarcasm. But anyway, you have to be positive. You have to be positive in life, but in trading, sometimes you have to be a little bit negative as far as what could go wrong. What does the guy on the other side of the trade know? What does opposite George, so to speak, know? Anyway, all right, let's shift gears and go to Crypto Corner. I do want to show you something here real quick. Sometimes in crypto, and I put this, I was showing this in the Facebook group, and this was my argument for taking partial profits, and it just happened to be an example I just stopped out of. But in crypto, unless you're going to buy 100 stocks, or you're in a market that occasionally goes through a ripper and bear market, a bull market, Freudian slip, like crypto, you can't just buy new highs. But in crypto, sometimes you can. And without getting into the volatility and all these other things that I probably should be using, I just figure if the market can move 20%, that's enough for me to take half, and that's all I've been doing. I'm doing this in very small accounts. It's nickels and dimes, but it's a lot of fun, and I'm just buying stuff that goes up. But you have to wait, and we'll take a look at crypto in 1 second. But you have to wait until you have a lot of them moving higher, and ideally you want Bitcoin to be moving higher too, because it tends to be a bellwether, obviously, for the other pairs, the shitcoins, SHYT. Anyway, as I've said 1,000 times before, when I hit that 20% profit target, I mine, so to speak, a little bit of those profits over to Bitcoin. So I'll buy $25 worth of Bitcoin. And it's just kind of a fun little experiment I'm doing. It's actually beginning to slowly work over the years, and I've actually accumulated a decent amount of Bitcoin, not a lot, but a little bit of Bitcoin in the process. And it's kind of a fun thing to do. It's kind of like a side thing. But anyway, you can see it came back down and stopped me out on a remainder. So I have better than the poke in the eye kind of trade. Made a couple of hundred. How much did I make? $100. I know. let's go party, right? $100 stopped out at 25, and 100 went to with the Bitcoin. If my math is correct on that, I think it is. Anyway, speaking of Bitcoin and crypto, let's shift gears to crypto. And if you guys want me to look at any crypto pairs, let me know. I'll be happy to do that now. So let's take a look at Bitcoin first. And you can see Bitcoin's pulled back to the moving average. Just as a Landry light pullback, you can see you've got lots of Landry light and then a pullback. And then I could bring it up in my ACP platform. And it's a little easier to see there. Oops. So you can see you've got lots of Landry light down here, okay? lows are greater than moving average, and you pull back. So that's a Landry Light pullback. It's also a trend pivot pullback. So your entry on a trend pivot would be above this little peak here. Do I need to drop an F-bomb? No. Anyway, it's a trend pivot pullback. It's also a Landry Light pullback. The only caveat is I just would prefer, or issue, I would prefer that the market would be well past these prior peaks in here, okay? You still have some people who are probably still looking to get out of break even. And ideally, you want to see this thing just blast through those levels so that a lot of that trading gets absorbed into the system. But anyway, it doesn't matter at the moment because your trigger would be above this little pivot point here, maybe 107 and change. 108 would be a little bit more conservative. And then stop out somewhere below the 200-day, I'm sorry, the 30 EMA moving average. 200 is probably way too far away. Ethereum has been waking up as of late, but lately it's been in a consolidation, but it's woken up recently. As you can see, it's taken off. And you can see it actually improve against Bitcoin. So it's been in a horrible downtrend forever. By the way, as I often say, 30-day EMA is your best friend. Look at all this trading. Nearly all of that trading was well below that 30 EMA, okay? You had one day where it just barely closed above it, but I think it'd be crazy to buy a market just because it had one little close above the 30. But as a general statement, that 30 EMA will keep you out of a lot of trouble, okay? So you want to trade on the side of the 30 EMA. Anyway, Bitcoin, Ethereum to Bitcoin has been improving as of late, but then you can see shorter term, we're getting stuck in this bit of a sideways range. Now, sometimes when they're really moving, you could just come in here and look at ones that are the strongest and just buy them as they're making new highs. Use a little money management, of course. Now, I'm not betting the farm on this. These are really tiny accounts. I'm trying to parlay them into much bigger accounts so I could say, hey, look what I did. Something like this, when you see these long tails like this, usually that's a pretty thin one, so that would not get me too excited. But anyway, you come in here and just look at the strongest ones, and if something's banging out some new highs or breaking out, it might be worth trading. As I've said quite a bit, and even earlier, I'm not a huge fan of breakout trading, but sometimes in these crypto pairs, when they're moving, you could just buy the ones that are making new highs. That looks okay, but you see you have long tails. But that would be something that I might get interested in, something that looked like that, banging out some new highs, okay, or new closing highs at least. But yeah, there's not a whole lot to do right now, but you have to check back often. So I'll do this every day. And again, here's a million little things, right? Details, million little things. I'll do this every day for a few weeks and not see a darn thing worth trading, and then kind of forget about it. And then all of a sudden I'll see something take off without me, more than one thing. So you have to continue to do your homework, but I'm seeing absolutely nothing that I feel like I need to do right now in crypto. But again, check back off, because just a few days ago, that was what, 2 days ago, they had 2 or 3 of them that were taken off. Let me show you what I'm still in. This one, I was thinking about exiting it soon. Dave, I thought you had a trading plan. Well, I guess I should have a trading plan in place. But I'll certainly get out. You have my word, I will get out if it comes all the way back down to 30. Just because things aren't really working out now, I'm tempted to probably bail out on that one. I'm still long as BNT, but it's not doing so well. So it see how I just bought them and they're going straight up, right? And it hit that IPT, chopped around, chopped around, chopped around. It's come down here a little bit. And if it comes down and gets back to my break-even point, then I'm out on the remainder. But right now I'm free rolling, got a free position there. So one loser and one still winner so far open. And then once again, at the 20%, I'm mined off a little bit to Bitcoin, just a little crumb here and there. And as I've said before, two things. One, if you were to buy a miner on eBay, you could get a used one and maybe even a new one. I saw a while back, might even been a new one for like 200, older model. And if you plugged it in, depending on your electricity cost, but for the most part, I did the math and it probably would lose about $15 a day because it would burn so much electricity and not make a whole lot of Bitcoin. So my thinking was, instead of trying to mine Bitcoin like that, why not stay in my wheelhouse and then trade the shit coins and see if I could turn them into Bitcoin? So, and again, that's just a small thing. If that account ever gets anywhere, then I'm going to have to start using some serious money management and so on and so forth. But for now, it's just kind of a fun thing to do. I know you probably want to party with me. All right, let's take a look at the overall market. If you guys want to take a look at any individual stocks, let me know now. I'll be happy to take a look at them for you. S&P 500. You can see it's stalling out a little bit today. That's a bit of a bummer because we have this overhead supply to overcome. As I was telling my peeps recently, when you're at a bit of an inflection point like resistance or whatever, a big up day is going to look like a like all clear, everything's great, and a big down day or modest down day even is going to look like the market is topped out. So you got to be careful not to chase your own tail. In general, though, things have really been improving as of late. We take a look at the NASDAQ composite. You can see a bit of an opening gap reversal there. It's stalling out at this overhead supply. So like I said, if this goes down, that's going to look kind of ugly because we're stalling at the supply. But in general, bigger picture, it has certainly improved and it's looking better and better and better and better. Rusty 2000, it continues to bump up against a little bit of the short-term resistance, and it has some longer-term resistance after that. The aforementioned gold stocks and gold to commodity. First, gold to commodity, you can see coming back in a little bit today, just kind of chopping around sideways, but longer term remaining in a decent uptrend. Gold stocks look a little better. They broke brand new highs this morning, but then unfortunately have come back in from there. A lot of sectors like the market itself or below a lot of overhead supply. This is robotics and AI. You can see lots of overhead supply there. But the thing is, as I've said earlier today in the market a minute, there are quite a few trending AI stocks out there, but whether or not they're set up remains to be seen. We'll just have to pay attention to what's happening. If you take a look at like physical uranium, which I think is PPLT, if I could find it. It's got to be here. Oh, there it is. You can see it's taken on physical platinum. That's what I'm trying to say. Uranium's doing okay too. That's probably why it's in my head. But platinum is really taken off. So we could see some setups here fairly soon. Although obviously it's a very wide and loose type of market. Social media has been improving as of late. The problem is this is one of these V-shaped recoveries at high levels. The market sells off hard, then comes right back. It's very hard for a market to sustain that type of move. Let's take a look at a couple of other areas. Now, here's one V-shaped recovery. So far, it's broken out. The thing is, though, this market is very overbought longer term, very dangerous to buy into that market. Now, it doesn't mean some people focus too much on trying to figure out exacts, okay? It's just a way of thinking about things logically, because sometimes you can have a V-shaped recovery and the market can keep on keeping on, okay? It can do whatever it wants. It's just very dangerous to buy into a V-shaped recovery. You're better off waiting to see if it breaks out and then look to play some pullbacks along the way. So here's the fence you can see just off of all-time highs. All right, anyone have any individual stocks you guys want me to take a look at? We'll take a look at a couple more areas in here. But if you have any stocks, punch them in now. So I have them. Marijuana, a bit of a bummer. It was doing okay. It was trying to bottom out, but then it rolled back over. So seems like I should have some jokes for that. Let's take a look at the semis, and I'll go ahead and wrap it up. Semiconductors, they were doing okay earlier today, but they've come back in a little bit. They're pushing into this overhead supply. You know me, I sure like to see them get out of it and not look back. And of course, while you're wishing for things, it'd be great if they made some new highs. Anyway, I think that's it for today. Any questions? Any stocks you guys want to take a look at? All right, while we're in impasse, obviously I want to thank all you guys and girls for attending today. I appreciate you taking time out of your busy schedule. Anything unanswered, you can shoot me an email at david@davelandry.com or leave a comment below if you're watching the recording of this. Everybody have a great weekend. I'll see most of you guys and girls that are here today. I'll see you in a few minutes in Facebook. Everybody else, have a great weekend and hope to see you again next week. Thank you so much, and may the trend be with you. You're welcome. You're welcome.